Are you leaving free money on the table? If you have a savings account with one of the big national banks, the answer is probably yes. You've likely noticed that online banks, like Popular Direct, consistently offer significantly higher annual percentage yields, or APYs, on their savings and CD accounts. In some cases, we're talking about rates that are 10 to 20 times higher than what you'd get from a traditional brick-and-mortar bank. So, what's the secret? Why can a bank you might not see on every street corner afford to pay you so much more for your money? It all comes down to their business model, and specifically, one huge cost-saving, physical infrastructure. Think about the big banks. They have thousands of branches across the country, each one requiring rent or a mortgage, utilities, security, and a full staff of tellers, managers, and support personnel. That immense network of physical buildings and people is expensive. That massive overhead cost has to be paid for somehow, and often, it's paid for by offering you, the saver, a near-zero interest rate. Your money helps fund their real estate and operating costs. Popular Direct, and other online-only banks, operate differently. They have a lean, digital-first model. They don't have thousands of marble-floored branches. Their operations are centralized and run efficiently online. This lack of significant infrastructure and overhead creates a massive cost advantage. Instead of sinking millions into maintaining physical locations, these direct banks can pass those savings along to you, the customer, in the form of higher interest rates on their savings accounts and certificates of deposit. It's simple math. Lower operating costs equal more money they can dedicate to attracting and keeping customers with great rates. There's a secondary factor, too: competition. The big banks know many people prioritize convenience and brand recognition and will keep their money there no matter what the rate is. Online banks, however, are constantly competing for your deposits, and the most powerful tool they have is a high APY. They have to offer a top-tier rate to convince you to switch, and that competitive pressure keeps their rates high. The trade-off, of course, is that you have to be comfortable with a purely digital experience. There's no branch to walk into, though you still get the security of FDIC insurance. But for many, the trade-off is worth the significant boost in their savings returns. Understanding this difference is key to making your money work harder for you. With that said, thanks for watching, and until next time.